Thank you. This has been a great panel. It's always one of the most important panels of the day, but we actually have a lot of interesting panels this afternoon. So I'm kindly asking Vincent Xu, here he is, to take us to the next panel, which deals with the capital raising options for international ship owners. We have a distinguished panel of CFOs of international shipping companies. And they will tell us how they raise capital in China and abroad. So Vincent, please take over. Here you are. And if we can have the panelists join, see Peter and Uta, and Gautam is coming as well, and Vikram.
Yeah.
Wonderful.
Good afternoon. This is Vincent from Stephenson, Harwood. Well, we are a law firm in comprehensive legal services providing. So shipping is about 1/4 of our practice. So we also do corporates and capital market. So in relation to shipping, then we can provide not only in relation to bank loans, leasing, but also helping on the M&A and also on the capital market thing. As part of the practice of shipping, so we also have 11 offices across the world, so we're covering most of the finance and shipping center in the world. Let me introduce my panel speakers. This is Uta Urbaniak. She has about 20 years in shipping and shipping finance. She was with a leading German bank in the past, and then she moved to Singapore in early part of 2006, I think. And then she joined Epicas for 12 years now. And you also lead the listing of the company's business in Oslo back in 2014, I think.
That's right.
Yeah. And next is Mr. Peter Schulz. He is the CFO of very famous Pacific Basin. And he was with BW Group, of course, for many years, and then he joined PB 2 years ago, Mr. Peter. And next is Gautam Khurana. He is the CFO of Praetorship. I say he has about 2 decades in the shipping field now already. And one of the things I would like to highlight is he has he has done different things in the shipping side, so he has a lot of variety of experience, I would say. So really a shipping man. Our last guest speaker is Vikram Hiranandani. Vikram, he is the CFO for Scorpio Barker and Scorpio Tanker. I think you got about 15 years in shipping already.
Yeah, and Director of Finance.
Yes, shipping and finance, that's right. So we have a very strong panel of international ship owners here, and I would say they are all very established, reputable ship owners, and they are from different jurisdictions and all listed. So very good, transparent corporate governance systems. Now, I want to start with the first question. Perhaps each of the speakers can introduce a little bit about your company, your existing fleet, and how you finance the fleet currently. Please start with.
Okay, good afternoon, everyone. My name is Uta. I'm the CFO of Epicas, as Vincent introduced already. Epicas is an owner and operator of LPG ships. We are in the small pressurized sector.
Yeah.
We currently own and operate 40 ships. Our vessel sizes ranges from 3.5 to 11,000 cubic meters, so we cover the full spectrum within the pressurized sector. Mm-hmm. We mainly move LPG on our ships. About 75% of our cargo is LPG. The balance is petchems. Our ships trade globally. Half of the fleet is trading in Southeast Asia, and the other half is in the Americas, in Europe and in Africa. We are headquartered in Singapore. We also have offices in London, in Tokyo and Manila. And we are listed in Oslo on the Merkur market. In terms of capital structure, We have currently about 300 million debt outstanding. The majority is financed by traditional shipping banks. We still believe that traditional banks offer the most competitive pricing and also most flexible structures, which we like. We have very good relationships to banks, so we didn't face any issues in the last years, despite a general tightness in the market. Mm-hmm. We also expanded into the Japanese leasing market. The Japanese leasing market, again, we find very competitive. We were able to release equity by refinancing some ships and at the same time reduced our pricing. So it was almost, a no-brainer to do these deals. And we always look at broadening our financing relationships and sources.
Okay. Just following on that, I mean, the majority will be from the traditional bank loans. So what's the rough percentage between the bank loans and the Japanese lease you just mentioned?
I think it's about two-thirds is
traditional
bank debt. The rest is via Japanese leases.
Okay, thanks. Peter?
Thank you. So I'm Peter. I'm with Pacific Basin. Yeah. We believe we are the world's largest owner and operator of minor bulk vessels, Handys and Supras.
You are.
Thank you. Our smallest vessels are 28,000 deadweight tons. Our largest are Ultramaxes, 64,000 deadweight tons. And we own and operate at any given time between 230 and 240 ships globally. About half of them we own, the rest we charter either long-term or short-term. We have a wide variety of commodities that we carry in the minor bulk. Biggest are construction material and agricultural products. We do not do iron ore or very little, if any, coal, so minor bulk player. We fund ourselves predominantly in the bank market. We are fortunate to have strong support from our relationship banks. Out of our 850-odd million of outstanding liabilities, I would say 70 to 80% is bank finance. Yeah. We have historically issued convertible bonds as well on an unsecured basis in Hong Kong, where we are listed, which has been very successful. And we have a little bit of Japanese leasing as well, some legacy leases, but it's not something that we have renewed in recent years. So the bank market is where we would go first and foremost to fund our balance sheet.
I see. Yeah.
Thanks, Vincent.
Gautam.
So I'm part of Precious Shipping, which is like Peter's company. We are in the handy-size, Supramax, and Ultramax space. We're a 30-year-old company listed in Bangkok. We're part of a trading company, which is about 150 years old. This company was in the grain trading business, which is how we first got into the handy-size sector. In terms of finance, we have a mix of Singapore-based banks and Thai banks. It's about 2/3 of our financing, and then we also have bonds, which are issued in Thailand.
Thank you.
Good afternoon, everyone. My name is Vikram, and I'm the finance director at Scorpio Bulkers and Scorpio Tankers, which are two separate companies but affiliated with the Scorpio Group. At Scorpio Bulkers, we operate mid-size ships. So we own and operate 54 Ultramaxes or Kamsarmaxes, while at Scorpio Tankers, we have the world's largest fleet. It's a fleet of 109 ships, ranging from Handymaxes to the LR2s, completely on the clean trade. In regards to our debt financing capital structure, between the two public companies, both the companies are traded on the New York Stock Exchange and headquartered out of Monaco. We have around $4 billion of debt. And to break that out between our different sources of capital, I would say around 40% of that is financial leasing, either in China, Japan, or Norway, mainly in China. And another 40% is the traditional, mainly European banks. And then we have some convertible bonds and US retail bonds, which is probably around 10%. And then we have some export credit agency loans, which is another 10% or so.
I see. Thank you so much. Well, Uta, you just mentioned you recently did some leasing with Japanese counterparties. Yeah. Can you say a little bit more about that? But we're quite interested in terms of how you see and how you structure a deal with Japanese partners.
Okay. Well, the deals we did were with local Japanese ship owners, so we didn't do any JOLCO structures. It was with local owners who are able to get attractive ship financing from the local Japanese banks. And we entered into bareboat charters with these Japanese owners and indirectly benefited from the attractive financing cost. These deals are usually long-term, so 10 years. Leverage ranges, it's quite flexible. There's no one size fits it all. It's, the deals we did were 70 to 90%. Okay. Our main aim was not to achieve a high leverage. Our main aim was to reduce our financing cost. And as I mentioned earlier, we were able to do high leverage at lower financing costs. So therefore, it looked very attractive to us, and therefore we entered into these deals. In Japan,
are these new buildings or second-hand vessels?
These were second-hand.
Second-hand.
Ships. Yeah.
Okay. And long-term, it's maybe 10 years.
Yeah,
10 years.
That's right. We have purchase options.
Purchase options
throughout the term, so we don't lose control over the asset. If we want to, divest or do something else, we can always exercise our option.
Yeah, quite interesting. So why not purchase obligation though? Are you not intending to buy the vessel after chartering 7 or 10 years?
We are okay to take purchase obligations as well, and we did if they are rightly priced, at historically acceptable levels.
Okay. One of the relevant factors, of course, is the determination of the bareboat charter rate. If it is a financial nature, of course, the rate will be based upon the actual value of the assets and also the margin, supposedly. But if it's operational, it's different. It's maybe matched to the market level.
Yeah,
so
that's right.
How you structure your deals in Japanese?
Well, for us, the all-in costs are always important. We calculate what are the all-in costs, and that's the function of bareboat rate and purchase option or purchase obligation price.
Yeah.
And if we think that that level is a long-term good level, then we consider. It's also, we have grown a lot over the last 4 years. We have doubled our fleet size, but we never did a deal just for the sake of growing. Each project has to be profitable from day one, and one important part.
So you're very sort of cost conscious. You want to make sure that your vessel is very competitive in the market.
Yeah, sure.
Yeah, okay.
Financing costs play an important role. So if the break even, is below long-term charter rates, then that's a good deal.
Is there any plan to expand your fleet in the near future?
We just announced that we signed a letter of intent to buy 4 more LPG carriers. The deal is still subject to documentation and financing.
Yeah. Smaller ones as well for the pressurized.
It's the larger size. Within the pressurized sector.
Okay. Okay.
Our focus and our growth was on larger sizes because the revenues are higher.
Yeah.
The OPEX are more or less the same.
Yeah. Okay, I would like to hear a bit more about your plans for financing those those ships later on, but let's just leave it now for now. Peter, obviously you receive a lot of support from your bank. You mentioned already. So can you elaborate a little bit more? I can see that you are very traditional, with very conservative on the borrowing side. So is there anything you can share a bit more?
No, I think, as I mentioned before, we're very fortunate to have strong support from a number of key relationship banks, and it is the majority of our funding comes from our relationship banks.
Yeah.
It's evidenced last year we did a big refi of our balance sheet.
Refinance.
We did a $325 million facility.
350.
325.
325.
We took out a lot of existing bilaterals, suboptimal facilities, etc., and consolidated everything into a revolving facility, which gives us the most flexibility.
Of course.
And the average age of that of the fleet that we financed was 50 vessels. It was quite a large package, even though the vessels in minor bulk are obviously smaller in average. But the average age of that fleet was 11 years.
11 years already?
Yes, but we
So
got an
what's the term of the
11-year,
finance?
well, 11 years on top of that profile.
Yeah.
So up to 22 years, which I think was a fairly good result for us.
11 years on top of 11 years.
Yeah, at 150 basis points.
Yeah.
So I think that shows the value of relationships and having a fundamentally what we believe a strong and solid business model.
Yep.
We are an owner, we are an operator, and we are a cargo-focused company. So we are not a tonnage provider. We are out there every day winning contracts and business from the ultimate user. And because of our scale, we are able to optimize our trading system, we're able to optimize our cost structure. And I think financiers can see that how we trade throughout the cycle gives them quite a bit of comfort on how we do this. So we've been able to achieve very good results from this. We will continue to look at the bank market first and foremost as our way of financing the business. It gives us the most flexibility at the lowest cost.
Yeah. Before the panel discussion, I think you mentioned there's also some encumbrance to ships as well in your fleet.
Well, we mortgage the. Oh, you mean unencumbered ships?
Encumbrance, yeah.
Yeah. No, of course. We have since closing the transaction last year. We have continued to grow the fleet. So we buy second-hand ships
by cash.
By cash, and then when we have a sufficiently interesting portfolio, we take it to our bank to finance them. And we have a portfolio at the moment of about 10 ships.
It sounds you don't need some more finance from some other banks.
Well, we never close the door to anyone. We opened our bank syndicate quite significantly last year with a new facility, and we invited a lot of new banks to come and join. We are open to other forms of financing. As I mentioned in my introduction, we have leases in Japan, which are attractive, and the prices of those leases.
Are these JOLCO or not?
No,
JOLCO?
they're not JOLCO structures. The JOLCOs are a little bit difficult because of flexibility.
No.
But just regular leases like Epic, I think, are quite interesting. The cost of those are coming down quite significantly, as you can imagine. So we are open to all kinds of proposals, but flexibility is important. So any lease structure will inherently always be slightly less flexible than a banking structure.
Yeah, my JOLCO is, it involves
JOLCOs is a little bit different beast.
I think, Okay, thanks. Yeah, Gautam? Yeah, I also always think that Praetorship Shipping is one of the highest regarded shipping companies. So can you share with us views of the strengths of your business?
Okay, so strengths, well, one of the, I guess, big strengths is, as I said earlier, we came out of a trading company, so our commercial teams are very, very strong.
Yeah.
We think they've performed well over the last 30 years. We invest a lot in also technical side, so we have a training center. We also have we part fund a college in Thailand, so that helps a lot. But the other thing I guess about us is that as a public company, we're extremely transparent.
Yep.
And I think that helps. We're very communicative also to our investors. So over the last 10 or 15 years, we've consistently been top ranked as far as corporate governance is concerned and on the Thai Stock Exchange.
Yeah, okay. I mean, I understand from the previous discussions that majority of your fleet is not covered by long-term contracts. So how will you deal with that issue with your finances? Can you just share a little bit more with us?
Yeah, so that's been the case with us for the last 30 years.
Yeah.
And we have seen, obviously, many different cycles over those last 30 years. And so it's, we do short-term time charters, and we're not averse to locking in our ships on the long term, but it all depends on the market conditions. But
is it always the case, or just in the recent years? I mean, talking about 20-80%.
Right. So it depends.
It depends. Course,
we try to, we look at what the rates have been historically, and then we decide whether it's a good time to lock them in over long term or not. So.
Understand. But anyway, it's accepted by the Thailand and also Singapore banks.
Yes, absolutely.
I see. Good. Vikram?
Yes.
Well, you already mentioned you've done different type of financing, of course, right? Among which 40% is leasing, and majority from Chinese leasing companies. I mean, you are probably one of the flag in the last 2 years in Chinese leasing market. And also you have done the other type of financing with different banks, European and also export agency as well. So can you discuss a little bit more about how much you did with Chinese, and what do you feel? I mean, what's the difference between these financing different options?
No, yeah. So if we just talk about the last 12 months between the two public companies, we probably did a little over $1 billion in Chinese lease finance from 6 different leasing companies in China. And we did a little over 600 million US dollars with the European banks. So we did like around 1.6 billion of refinancing on new debt over the last 12 months. For us, at the end of the day, we do have financial covenants, so we are mindful on the amount of leverage we take. We have a 60% leverage covenant across.
So it's apply to the globe, to the group.
Yeah, the most stringent financial covenant. It ranges from 60 to 70, but at the end of the day, you got to comply with 60% net leverage.
Okay.
So you do get credit if you hold a lot of cash. So we have done deals, with traditional European banks as low as like 47.5% leverage, and then with some of the leasing houses we've done in the 80s. And as long as you retain the cash, and the cash is not spent, it really does not impact your covenant, at the time of testing. So we are mindful about that. There's a lot of value, as an international ship owner to diversify your capital sources. So we like to have a mixed balance of both bank finance and lease finance. And then even we are quite active in the debt capital markets with US retail bonds or, exchanging our old converts for new converts. So we look at the different sources of capital that are available to us, and even we are quite active in raising equity. And, for us, our fleet is young. In bulkers, the age is on average around 3.5 years, and on tankers, it's 4 years. So even, if we have like, 55, 60%, close to that kind of leverage, it is fine for a young fleet. But, over time, at least on tankers right now, when the market environment is good, we've started paying down some of our bonds, actually prior to its maturity date, and trying to delever the balance sheet.
Yeah. So, I can see that you're taking finance from leasing banks. So in terms of the percentage, you obviously mentioned 40, 10, 10. So this is the current situation. So how you manage this match the market change? Exactly.
So last year, over the summer, we did a lot of sale-leasebacks on our product tanker business as the market sentiment was weak. And we refinanced a lot of ships, 41 ships over the summer, both with leasing companies and with certain European banks. And we identified the ships that have low leverage, and we increased the leverage on those ships and raised over $300 million of liquidity from those refinancing of 41 ships. And then slowly thereafter, we raised some equity on the New York Stock Exchange as well. That was $337 million last October. And, right now in the first quarter, we had a good first quarter, a profitable first quarter. So we used some of the, cash flows from operations to pay down debt on a voluntary basis and try to reduce the leverage.
Just last quarter?
Yeah, so like in March, we paid off a little over $50 million of a bond in advance, and
But everything is below that 60% covenants, right?
Yeah,
you
exactly.
voluntarily paid and reduced that percentage.
So when we raised the equity last October, close to the end of the year because it's calculated on a net leverage. And when you have $500 or $600 million of cash, you benefit from the leverage calculation because it's not on a gross basis. So it is well under 60%.
Okay.
It's probably closer to the 50% level on a net leverage basis.
Yeah. Interesting. Thank you. Uta, come back to you again. Well, we obviously sit in Shanghai and we talk about the options for international ship owners. And one of the obvious options is the companies here. So how do you think, is there a chance of, are you interested in Chinese leasing companies? Do you deal with Chinese lessor? And if you do, what do you would expect from leasing companies here?
At the moment, we don't have any transactions with Chinese leasing companies, and I think traditionally Epic has been more a low leverage, conservative company. We watch, as I mentioned earlier, we watch break-even levels very carefully, and we feel that high leverage is not always desirable. Therefore, I think we haven't done anything so far. But I think there's also a shift in the product. I think there are leasing companies now who offer lower leverage at lower cost, especially to larger corporates. So therefore, we never say no. We never exclude anything. We look at all options. We always want to broaden our sources.
So what would you expect from the lessors here? What would you expect?
Well, I think we would like to see lower leverage, lower cost, and flexibility.
Low leverage, lower cost. Okay.
But then it's more the traditional bank product. Then we are back to
Are you really looking to high leverage and relatively low cost and flexibility?
I don't know whether that's available.
I mean, anyway, I think it's you have done this before. So really, as compared to Japanese lease, I mean, Chinese leasing companies, they provide more funds, in fact, and I think it's very typical that they're providing slightly higher leverage level in terms of financing. But they can provide flexibility and long term, even longer term. But probably the cost will be not as less as Japanese lease. But you can find out from your colleagues and people here later on if you want. Peter? Yeah. I think you haven't done any lending or borrowing from any Chinese financial institutions at all?
PB, no. We have no Chinese leases or Chinese borrowing.
Not yet.
And not yet, at least.
One of the reasons is because you do not have new buildings.
Well, we don't have any new buildings, but I don't think that's a restriction per se. I think Chinese lessors are happy to finance second-hand ships. In my previous roles, I've done Chinese leasing, and it's been a positive experience. But I think I can only echo what Uta said about the motivations. Good access to the bank market.
Why do it?
And this very high leverage is of no value to us. Actually, we prefer to keep, just like Epic, a conservative balance sheet, throughout the cycle. And I think that's what enables us to achieve the rates we get with the banks today. Having that philosophy is absolutely crucial.
Okay. I mean, that said, you mentioned in the fleet that you own and operate. I think quite percentage of it is basically charter investors, right?
Yes.
And I understand from the market, and also I think last panel they also mentioned that there are leasing companies here offering a time charter basis to owners and operators, right? So they become, the leasing companies here become the real owners, and they lease out and charter out. Will you be interested in doing a deal with leasing companies by such a way? Or?
Well, in a way, it doesn't matter who's offering the ship.
Yes.
We are not that interested in doing long-term time charter contracts. And that is because we, like many others, have lost so much money on our books in the past, right? So taking in long-term time charters is incredibly risky. And
why you say long? How long it is?
I mean,
over
5, 6, 7 years deals. We don't do those anymore.
So the chartering vessels in your fleet is less than 5 years?
Well, we still have a long-term book, which is costing us a lot of money. We're working it out as time moves forward. But what we do today is we take ships in on short-term basis. Occasional deal, we can do 1 or 2 or maybe 3 years, but not longer than that.
I understand.
Also, we do not want to encourage more new buildings, right? So, a lot of new buildings is driven by long-term time charters, And the last thing we need in dry bulk is more ships. We have too many ships as it is. So we don't want to encourage that at all.
Okay, thank you. Gautam? Well, I understand Precious Shipping issued bonds at the local market previously. So can you tell us a little bit more about that?
Yeah, sure. So we have two bonds. The total about $155 million. One was a 3.5-year bond. The other was a 5-year bond. They were issued in Thai baht, but we swapped them to US dollar.
Okay, so you got a local currency bonds.
We have local.
But you swap it.
Yeah.
Okay, against the exchange currency risks. I see. 5 years, you mean?
5 years and 3.5 years, correct.
Is it a very competitive rate, or?
It was definitely very competitive. We looked around and we thought this was extremely competitive, yeah.
Oh, very competitive.
Happy,
okay.
yeah.
I'm not going to ask you how much, but it's very competitive. Okay. Yes, Vikram?
Yes.
Yeah. So I think you are very active, of course. Last year, as you mentioned, you got issuance of the new shares, you got a leasing, you got a bank loans. So now if you are asked to expand your fleet by another 5%, how are you going to do it?
Similar, it goes back where we are in the market cycle.
Yeah.
If we're not in greater need for liquidity, then we generally like to do the traditional bank financing.
Yeah.
But of course, if we do need the liquidity, we are very happy to do lease financing.
Okay.
So I would say it's pretty much tied, and even it's quite important depending on the size of how much financing you need to raise. I don't want to be in a situation where I'm trying to exhaust my capacity with a particular bank or so. It's always important to ensure that you have appetite for future deals, so you have dry powder. So that is another consideration that we would be mindful of. And that's why balancing between the different sources of capital is of high importance and relevance to us. So that is how we would do it.
Yeah, thank you. Thank you. Yeah, I think one of the interesting point today for the panel is, again, for international ship owners, they all listed from different jurisdictions. So I would like to just ask a question in relation to this side. Uta, so, I mean, you lead the company listed in Oslo in 2014. So is that a particular reason? But the company based in Singapore, of course.
That's right.
And you listed in Oslo. So is there a particular reason for that, or what's other?
Yeah, I mean, to answer that question, I probably have to go back to 2014 when we listed. Epic was a different company at that time. We were much smaller. We had only 20 ships, and a main board. I mean, we were probably too small for a main board listing at that time. Nevertheless, we had ambitious growth plans. The timing was very good. So we wanted to tap the capital markets, and the NOTC market in Oslo seemed to be a very suitable place to do that. A lot of ship owners use the NOTC as an interim platform before they achieve the main board listing. So we did that back in 2014. We listed on the NOTC. We raised $75 million, which we used for growth. And in 2016, we switched to the Merkur market, which is a relatively new marketplace in Oslo. It allows for electronic trading, which facilitates better liquidity. And we see Oslo as a very efficient marketplace. There are lots of international investors, also Norwegian investors who are very knowledgeable, who understand shipping, and who understand energy and gas.
Thank you. Thank you. Peter, I mean, Basin, I think, is one of the very famous shipping companies, also are eligible for the Shenzhen Hong Kong Stock Connect. You're probably one of the very few shipping companies who has that a privilege. So can you say a bit about Hong Kong listing, and also how does this Shenzhen Hong Kong Stock Connect bring to your company?
Yeah, so we are listed in Hong Kong. It's our home. We've been there for 30 years. We listed in 2004. We headquartered there, and I think being listed in Hong Kong has been one of the great strengths of Pacific Basin. The market has been very supportive of us, both when raising equity and convertible bonds. We have a scarcity value in Hong Kong. We're the only pure dry bulk company listed. So it's an opportunity for investors in that market to take position on our particular segment. Many other markets, there are more companies listed. It's more difficult to get attention, perhaps, sometimes. Shipping companies suffer from low market values. You know, we have $1 billion. We think that's a lot in Hong Kong, but in the big scheme of things, we're tiny, right? Yeah. But at least we have 100% free float, which helps. But you know, being listed in a market where you're the kind of only one, I think makes a big difference. We have been a member of the Shenzhen Connect, which is a mechanism for mainland investors to invest into the Hong Kong stock market. And our experience has been quite disappointing. It's not a big driver of the share price.
Not yet.
At least not yet. And I think today is only some percentage point of the stock that sits in this connect. You know, our shareholder base is global, right? We have about a third in North America, a third in Europe, and the rest in Asia. We would love for more mainland investors to invest, but we also acknowledge that they have good opportunities to invest in shipping companies locally here in China. So we do hope that that connection brings more demand, but to be perfectly honest, to date it has not been so much.
So you welcome Chinese investors to be a shareholder of your company?
We spend a lot of time here in China. We spent the day-to-day talking to investors here, but it's also fair to say that many of the fund managers here also can buy our stock out of Hong Kong with Hong Kong entities. Right?
You don't know, right? Maybe they're behind.
So it's not. So it's not all about the connect system.
Yeah. I mean, it's very common. Like the ship flying Hong Kong flag may not necessarily be a real local earner, right? Maybe from China. Yeah, interesting. Gautam, would you say a few things about the listing in Thailand?
Listing in Thailand. So we've been listed since the early 90s.
90s, yeah.
Sorry?
Yes, please.
Early 90s, and as I say, I mean, we've had a very good experience there. We believe, as a public company, as I said, it's our responsibility to be as open and transparent with our investors. That's and which is why, again, I'm repeating myself, but you know, corporate governance is very important to us.
Yes, indeed.
That market has served us well.
Okay.
You know, we are historically a Thai company.
Yeah. I understand it's part of the bigger group.
Yes.
Okay. Vikram, you want to say a few things about the New York listing?
No, similar to what Gautam said, you know, we have to be very transparent when you're on the New York Stock Exchange. Both the companies are publicly traded. We also do enjoy good free float, and there's a lot of trading liquidity in our stock for both the companies, which is great because as a prospective fund or investor, they take a great level of comfort saying that it's, you know, easy to get into the stock, but of course, even if they need to exit, they can exit it quite quickly in few days or so, depending on the position. But trading liquidity is an important measure, and we do enjoy very good trading liquidity in our stock. And no, it's worked out really well, and we are quite active in the equity capital markets, and we have a good balance of the long-term valued investors and then some active hedge funds that stimulate the trading. So it's a good mix, and some of these investors that we have been there for a very, very long time and very supportive of the company, basically since incorporation. And it is they are very important stakeholders in relationships, just like our banks and leasing companies.
Thanks. Well, finally, I just would like to ask each and every panel speakers a last question. So, we are discussing about the options for the owners, right? Time already? Last one? Yes. Just want to say a few things about what is your idea capital structure, and to what extent your plan will be related to Chinese financiers. Very quickly, perhaps.
Well, I think I mentioned already we are conservative. Our ideal structure is low leverage, around 50-55%. And if we can see that from Chinese leasing companies, then there's business to be done.
Okay.
Exactly the same from me.
Yes, just very quickly. So 2/3 would be amortizing debt, 1/3 bonds. Yeah.
Okay.
Yeah, we also like amortizing debt a lot, and 90% of our debt is amortizing. But in regards to capital structure, depending on where we are with the age of the fleet, we are very comfortable with our 60% leverage covenant, and certainly try to be well under that. And over time, if the market is good, we would like to delever and further reduce our leverage.
Okay, thanks.
Thank you.
Okay.